Hey guys, welcome back to another edition of the Market Review. My name is Vasily, I'm your trading coach and professional Forex trader. For today's weekly edition, I prepared for you the analysis for gold. And I noticed that there we have a very common mistake that traders make when they analyze the market and when they trade the breakouts. So we will discuss price action, channels, and breakouts. And there, I think the information that I'm going to give you, it will dramatically increase the accuracy of your trading. I think many of you were stuck with such issue, and once you see how it works, once you get the idea, you will see the dramatic change in your trading. So enjoy that. Don't forget to like this video, don't forget to subscribe to this channel, and please watch until the end because I have something to tell you. Alright, so first let's start with the long-term perspective on gold, and let's analyze briefly the weekly chart. What we should realize is that here comes our previous structure highs. Yes, here goes our previous structure highs, the highs of 2011, 2012, and now we are clearly above that. Weekly candle has closed above that, and now you see that we're going higher. We are going higher, and most likely the all-time high will be reached soon, right? So if you were preparing for shorting this structure here and you still missed that and you still want to short, realize that we are now trading above that level, and now clearly this broken structure now serves as support. Yes, if when the market was trading below that it was the resistance, now it serves as support, and if for some reason the market will drop to the downside, then it will be the first point to buy from to catch the next wave to the upside, right? So just in brief, the higher time frame analysis, and now we will start the top down, yes, going down and lower, checking the details on the lower time frames. Now we switch to the daily time frame, and on the daily we just see more details about the price action, and clearly same picture, the market is just going up. We see the sharp bullish trend and the market going higher. But what happened recently, if we analyze just the recent candles, you can see that 1, 2, 3, 4, 5, 6, 7, 8 days we are trading on the same level. So here is our current trading range. We are now trading within that, and currently the market consolidates. We see the multiple rejections from higher levels, yes, with this wicks right here. It just tells us that for now buyers can't go higher, they are rejected. But at the same time, when the sellers start to push lower, we see the same thing. The market rejects the sellers, and we see the wicks to the downside as well. And also just on Friday we had this nice bullish candle to the upside. It just engulfed this previous bearish candle. So clearly right now the market consolidates. It is in a consolidation, and we never know how long the market will consolidate. Just analyzing the previous price action on gold, sometimes it can stuck in a very long correction cycle. So just remember that if you just blindly buy, you will pay your fucking broker just for the swaps. You will pay for holding this long trade. So if you think that it is just so easy to buy it because the trend is bullish, your broker will outsmart you anyway. So remember that currently it looks like the correction cycle, and for now quite risky to jump in the bullish movement, right? Now let's analyze lower time frame, and I will show you very interesting thing right there. We are now on the 4-hour chart, and let's on the 4-hour chart analyze the price action. Here what is important is that here, for example, is our local structure low. From that we started a very strong bullish wave to the upside. We reached that point right here. Here was the high, and from that the market retraced. High low right here, then the next movement to the upside. Retracement with the high low, new high, high low, new high. And now you can see this is our last structure high. The market reached that last structure high, and for now it can't go above that. It is trading just below this high. So why do we need this price action analysis? Based on this high lows, we can draw the trend line. Here goes our rising trend line right here. Yes, you can see that it is confirmed by many touches. Yes, many times the market tested that. Yes, with the wicks, with the candles, we saw the strong reaction from that trend line. And here goes our rising trend line here, serving as the resistance. So clearly here we have the rising channel. The market is trading in a rising channel, and it successfully respects its boundaries, yes, with many touches. And what happened on Friday, and I think even on Thursday, you can see that the market right now is trading below the support of the channel. So the market has violated this support of the channel to the downside, and now we are retesting that. And we see the nice rejection from that. So it looks like it is just the perfect selling signal for us, and we can just short from here, expecting the strong rally to the downside. What is the problem with that? And by the way, checking the ideas on TradingView, I noticed that so many traders started to post this short signal. They started to post the short signal telling that it's just the safest zone to sell from, and that it is just the perfect signal that the selling wave is coming and we can expect like crazy movement to the downside. What is the problem with that? Let's in details analyze just the recent price action during this week. So here goes our, not during this week, by the way, during July. So this is our last bullish leg, right? Then the market retraced, and here is our structure high, local high low is right here. Then the market bounced to the upside. We bounced to the upside and we kind of retested the high. So here we have the equal high. Then we dropped, and there we went lower, we were rejected. So we can see that here we have the equal low, right? From that, the market bounced to the upside again, and here we have one more equal high, yes. Then once again bounce to the downside and equal low, yes. And from that, right now we see the bullish movement. So how it looks like right now? It looks like it is just the perfect example of the consolidation and the horizontal indecision range. So we are trading in that range, this horizontal support right here, horizontal resistance right here. And if we analyze the market from that perspective, it looks like it is just the consolidation and the breakout of the channels that we noticed. Yes, let's return this channel once again. Yes, here goes the support of that channel. And the breakout of this channel from that perspective just doesn't mean anything, because the market is weak. The market is consolidating. And so what that it violated this channel? So what? The market still respects this lows right here. It clearly respects that lows, and it can't go lower. And in this sharp bullish trend, in this strong bullish rally, if you rely on such breakouts of the channel, most of the time they will be false. Realize that trading against the trend is very risky, and you should look for so many different conditions to make it happen, to make the accurate trading decision. And just doing that, selling here, it is too risky. It is just the consolidation right here. It looks like the market right now is forming the bullish flag. It looks like it will continue trading in this range until it violates this range to the upside, and then will go higher to the all-time high. So never trade such breakouts. For the confirmation of this breakout to violate the channel, we need the violation of this lows. We need the breakout of this lows to the downside. Only then we can say that the breakout of the channel is confirmed, that the breakout of this range is confirmed. But for now, too risky, And yes, everything can happen. It can drop, but we talk here about the probabilities. And in the long run, if you will just trade these breakouts in the long run, I truly believe that the accuracy will be very, very low. You need the violation of this horizontal range. Horizontal structure is always more important than this vertical levels. Yes, so we need the violation of that. Yes, so realize that. I hope it is very important information. And just one more thing on a daily to show you. With all that in mind, if we return to the daily time frame, yes, if we return to the daily time frame and just remove all the stuff, what I want to show you here is just take a look at that candle, this last bullish candle. You can see that right now, here is the range of that candle. And what do you see? The market is trading within the range of that last bullish candle. Yes, here goes our range, and this is just the classic example of the inside bar formation. This yellow here is the modest bar, and the market is trading within that. It is just the clear consolidation, and even on the daily we see the clear signs of the consolidation. Then this 4-hour breakout of the channel, it just no sense for us. You see the indecision right here. You see the consolidation within this inside bar. And if the market will violate the boundaries of this inside bar to the downside or to the upside, it will perfectly match with our analysis on the 4-hour. Yes, and our condition for the confirmation will be met. Yes. So this what you should look for. You should look for the clear signs for the strong breakout of the horizontal structure, of the vertical structure, both. Not enough for us to just see this breakout of the channel. Yes, trading within or trading against the trend is very risky. So that is why I give you this complicated conditions to be met, because I don't want you to lose money. Realize that the majority who post the ideas, they just don't care at all. They want to post something, but too risky. Yes, too risky. Realize that. And yeah, and now let me tell you something. Alright guys, that's it, and I think it was very nice lesson, and I truly believe it will help you a lot in trading. So what I wanted to tell you is that it is the last chance for you to join my educational group on a big discount. It is the second discount this year, and I don't know when will be the next one, so it is the best way to start learning. I have so many educational videos for you, a lot of tips, a lot of examples on live trading, risk management, structure analysis, everything you need to get how it truly works, how you truly need to trade, how the rule-based strategy works, all that. So don't miss your chance. It is the last day of the discount for you. So all the links in the description below. Contact me on Telegram, Facebook, TradingView, Twitter, and I will give you more details. Don't miss that chance, and thank you for watching, and good luck next week, guys.